Hello and thank you for watching. My name is Andrew McKee. I'm one of the portfolio managers here at Elston Asset Management with a quick update regarding the purchase of Endeavour Group for the Australian equities component of investor portfolios. Endeavour is Australia's leader when it comes to retail liquor and hotels across a wide network including Dan Murphy's, BWS and ALH brands. We like Endeavour Group for a number of reasons, but certainly because of their dominant market position. You can see in retail liquor, they are 40% of the market, with the nearest competitor, Coles, only 14%. If we look at hotels, it's a very fragmented market, but they are the leading player at 9%, and we see that growing over time as they move to consolidate that industry. Also, you can see Endeavour Group is a very defensive business. With consistent sales growth over time, we think they can continue to grow their sales in excess of nominal GDP. Now, if we look at the reasons we've invested in that business, if we look at the future growth and earnings potential, we see a number of key strategies that they can execute on. Firstly, by leveraging their significant brand and scale, they can drive economies, take more market share, and particularly in supply chain, derive efficiency. We do think they'll accelerate a store renewal program to drive sales per store. If we look at hotels, we think they can consolidate that industry through acquisition, and that would also augment their store rollout for Dan Murphy's and BWS. When it comes to liquor retail, we think they will vertically integrate and drive private label sales, increasing EBIT margins over time. And lastly, we do think they'll increase the proportion of sales to online and drive efficiencies. And if we look at Dan Murphy's, they already have 5.3 million or 20% of Australia's population as loyalty members, which we think they can leverage over time to increase market share. Now, like all investments and companies, there are some key risks. For Endeavour Group, it is a potential ESG derating. There are obviously significant social impacts when it comes to excessive alcohol consumption and problem gambling, and that may lead to decreased investor demand for the stock and a derating of the multiple. They also operate in a pretty highly regulated industry, and we do think the chance of increased regulation is real, as well as increased taxation of liquor and gaming revenues. But Endeavour is a significant stakeholder in the industry, and they have managed these risks in the past, and we think they continue to do that in the future. Now, we're funding the purchase of Endeavour Group through the sale of Woolworths. We've owned Woolworths since 2016, when it ran into some problems in the Masters home improvement business, as well as Big W and supermarkets. That allowed us to purchase the business below intrinsic value, and it has significantly outperformed since we've owned it. But going forward, we think increased competition within Coles, IGA, as well as Aldi will put pressure on that business, and we see higher risk-adjusted returns in Endeavour Group for investors going forward. Well, on behalf of the whole Elston Asset Management team, I want to thank you very much for your ongoing support and wish you all the best for the financial year ahead. If you do have any questions regarding the purchase of Endeavour Group, please contact your Elston representative.